Hello guys, welcome to Structure Video, the movement of the market. This is the core of our course. This is the foundation. This is what we need to master. So we see it fit that we don't explain a lot here. We leave everything for the chart. Only one slide will be explained here. Okay, let's go to it. 3 focus on market structures. Structure number 1, we focus on structure break. On that, what does this mean? Look for structure violation, then we take advantage of that. We need to see clear break on ideal time frame. The time frame that you are trading, that you are analyzing your market. We need to see clear break of structure there. You will see what we mean by this when we do time frame correlation, because at some point you might move to lower time frame and see structure broken at that point and thinking that the structure was broken on your ideal time frame, only to find out that the structure was never broken here. We use bodies for structure analysis, not wicks. Remember when we were drawing support and resistance, we were using wicks. So on structure here, we are going to use body close. We are no longer going to use, maybe on support, we are no longer going to use a bearish wick. We are going to use bearish body close to mark off our structure. You will see that when we get to the chart video. Then structure 2, we must find the reason not to exit the market on counter trends. When the market is pulling back, we want not to find the reasons to exit, thinking that the market is turning against us. Hence, we said we buy support, we sell resistance. Then let's say we bought support and the price pulls back, we see resistance, then we think that the market has turned. No, this will tell you why we must stay. Number 3, trading inside the structure. This gives us an advantage while waiting, maybe trading inside the structure. You will see what we are talking about when we get there. Then, okay, before, on structure 2, market will respect continuation patterns. You remember when we were talking about continuation patterns, then the continuation pattern will occur. One continuation pattern is occurring, then you would think that the market is changing direction. But once you notice that this is a continuation pattern, then you will have to stay in the market knowing that it will break this pattern and continue to its direction unless if something happens. Okay, to structure 3, trading inside the structure. We take advantage of the first signal that changes the trend. By that, you remember when we said we take advantage of double top. When double top occur, we just buy at that point. Okay? We focus on support and resistance. Understanding the principle of highs and lows is the key here. We look for structure violation to spot better entries, maybe double tops and bottom failures. Guys, from now on, we'll be doing our lessons from the real charts. If you have came this far and you understand everything that is being taught previously, and you bear with us since we did not use script in order to explain this to you and try to understand from that, you deserve bells. So see you in the chart videos where we'll be explaining time frame correlation and we'll be explaining confluence and we'll explain the entries, how we enter the market and exit. Everything else that is left is for us to go to the chart and consolidate and try to mix and match everything that you have learned. Make sure that if you haven't understood anything previously, go back, repeat the video, and use the platform that we use to communicate, to ask questions. Maybe someone will have better explanation on what you want to understand. But for now, will move to the chart videos. See you.